Good afternoon, everybody. Today, I want to share with you something very interesting on long-term investments, how my algorithm is able to detect long-term investments and the latest results. What you're looking at is an all-time chart of United Health Group. UNH is one of the top 100 companies in the industry in the United States. It is considered a stock that if you were to invest for the long term, this is one of the stocks that you would be looking at. What the algorithm does, it looks at the top companies in the United States in the stock market, and it alerts you when is a good time that you should be able to buy those stocks. For example, would you want to buy Nvidia at $182? You might, but if the stock market has a correction, Nvidia is going to correct. It corrected a few months ago down to $89, if I recall, or $87. So one of the advantages that the system gives you is it recognizes areas that are support areas for you to be able to pick up stocks that are considered top quality by the top hedge fund managers and personal wealth managers. So United Health, what happened with United Health is the stock came in from about $630, as you can see. The algorithm optimal price target to buy the stock was somewhere around $241.12. As you can see right here, it's showing you that area. The software is telling you this is where you want to pick up United Health stock. I'm going to now show you what happened when the stock reached that area. Now, it is possible that the stock could also break through that area and fall down to the next support area, which would be somewhere around $135. Now, you're going to say to yourself, well, that sounds a little crazy. I'm going to invest into United Health at $241, but it could technically fall all the way down to $135. Yes, that is correct. But you are looking at an investment in a stock that is going to give you a good entry point once in a decade, maybe. Therefore, what you could do is what's called cost averaging. The system also helps you in doing cost averaging down, and then you can buy the stock all the way down to $135 if that does happen. You could also decide to exit the stock if it falls down below a certain area, let's say 224. The system also will give you that option. But let me just give you an example as to what really happened here with United Health. Few days later, after my system showed that United Health is at a great entry point at $241, news started coming out. I saw it on CNBC that Buffett started buying United Healthcare, and Michael Burry joined United Healthcare, and David Tepper is starting to add to his positions in United Healthcare. United Healthcare is obviously a stock that all these hedge funds and hedge fund managers were looking at in order to establish good entry points for this stock. And obviously, they've been accumulating stock throughout the last few months. Warren Buffett actually asked for an extension in order not to disclose what stock his fund is buying. I'm going to show you a little bit more. This is a shorter term graph. Each candle here is a day. Before you were watching, each candle was a quarter. And what happened was the stock over here, which was on May 15th, it fell all the way down to about 200 and what was this? $248.88. Now I was waiting for the stock at $241. It didn't happen, so I didn't pick any of the stock up, and then it shot back up to the next area, which was 315. This green line, as you can see here, 315. But that wasn't an optimal point. I've waited and waited and waited for the system. What happened was I actually told a good friend of mine also, this could probably be a good pickup from $250 all the way down to about 240. And the stock came in, it closed one day at 234.60. The next day it closed exactly, if you see it, around 241. And then it started going up, came back in one more day, and then the Berkshire Hathaway news came out and the stock shot back up to this 315 area. So this is another way that I'm showing you that my algorithm can help investors that are looking to invest long term in major stocks. The algorithm identifies these stocks and it shows you the optimal entry points for those stocks, as you can see now. It is obviously possible that United Healthcare is going to come back down, more bad news is going to come out, and it's going to fall below this 241 area. But the algorithm is based on different parameters, which are optimal entry points. It creates the optimal entry points. And as you can see, I am now learning that major hedge funds, I don't know where Berkshire Hathaway started picking up the stock. I'm assuming he started picking up the stock somewhere around this whole area. This is Berkshire 315 area and below. And he knew that it was going to fall down here. If it was going to, he was certainly going to pick up more shares. And if he's invested in the stock at 241, he probably also figured that he's going to average down if it goes all the way down to 135. Well, I hope you enjoyed this. If you want to learn more about my algorithm, let me know. You guys have an amazing day out there.